Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, August the 13th. The year's 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And just a friendly reminder on a Tuesday, risk management. Never lose more on any one single trade than you are willing to lose. Walmal, welcome back and happy birthday, belated.
Oh, thank you very much. Yeah, it's been another lap around the sun, as a lot of people like to say.
Yeah.
We're sitting out here right now and just talking about trading here. You know, we have a range of 55 pips on the smart range for the day, which is in the 40th percentile. So, so excited last week because we're seeing all those days over 100. And here we are back down to the doldrums again. So, trade what you see. And that's what you got to do.
Yeah, exactly.
So, looking at it right now, we're just got a flip-flop box on the screen that it broke out of. And if he had gone short on that flip-flop box at the top of the hour, you could have picked up, I don't know, potentially 4 or 5 pips, and if you gone long on that flip-flop box, well, you either would have lost or you could have potentially, if you got out quick enough, could have picked up 2 pips. So,
yeah.
Make your pips where you can.
And just for traders, I added something to the screen, one of my oldies but goodies, the TRO dynamic SR indicator. Since we've been talking about edge trading, I thought that would also kind of highlight some of the edges. You can see right here when you see a row of horizontal diamonds, the blue ones here for support and the red ones here for resistance. But we're not really looking at them in terms of support and resistance. We're just looking at the edges, as Walmal likes to say it, and trading the reversals.
And then if it gets to the other side of it, and it's clear, then you can go and use it, go and trade it as a breakout. I don't trade the breakouts, but, that's just another methodology that you can use. And that's the great thing about trading. Some people like to trade reversals. Other people like to trade breakouts. They both work. But what you need to do, you need to go and pay attention to what's going on in front of you and recognize, and that's the whole thing, is recognize, is this a breakout or is this a reversal? And then you have to start figuring out, okay, how do I know which is which? Well, a lot of that comes down to seed time more than anything else. There's a lot of times they'll sit there and I can sit there in a trade, or not in a trade yet, but looking at a trade and saying, okay, we're at an edge. I got a flip-flop box. I'm just not going to take this because, it just doesn't look like it's going to go and actually turn here. I think this wants to continue. Now, what are some of the factors that you learn over time? Well, if you've got some type of target above it that makes sense, for instance, some type of psychological target. So for instance, like if you had, a flip-flop box and you go short on the flip-flop box and you're at 2805, and it's, got a flip-flop box there, and you're saying, okay, it's, we can probably go long here on a reversal off of it, but, you look right down, only 5 pips away below that, you get a double O. Well, you know that it loves to go down to those psychological numbers. You may not want to go and take that. Maybe you go and look for a flip-flop box to be developed down at the 2800. And then, and I'm using this right now on the chart. I'm coming up with those things right now on the chart. And guess what? We had a flip-flop down at 2800. And now I can go long and, and take that reversal. Will it work? I don't know. But what I do know is that I got a better chance of it working because it's coming off that psychological number. I got a flip-flop. It's on the edge. So there's a lot of different things that are going in my favor.
Yeah. You know, one thing about psychology, I was reading some other forums, and somebody spoke of just keeping it really simple and you know getting rid of the complexity. And
Yeah,
that's one of the things that as humans, as the one of my favorite authors, Robert Ringer, talks about the life complication theory and how people just have a tendency to complicate their lives. And that's what happens
yeah,
a
and
lot in trading, is that rather than just stick with something really simple, they they complicate it. I mean, you can see that a lot, switching gears like into the prepper world. You see all these people with these multi-tools, and as opposed to just having a simple knife, a simple axe or hatchet. It's just too funny sometimes.
yeah, you got a somebody pulls out of their pocket a Swiss Army knife that's got everything on it but jackhammer. You know?
Oh, have
But
you, yeah,
people,
speaking of Swiss Army knives, have you seen that new one they have out? I mean, it has so much stuff.
I haven't seen it, but I know that they've been going in that direction, just putting more and more stuff on those things. But yeah, and bringing it back to trading, I think you make a very, very, very strong point there in terms of making things overly complex. Keep it simple, stupid. As the old expression goes. And the reality is we tend to overcomplicate things, and keep it simple because the reality is we our brains are not geared up to go and be able to deal with 45 different variables all at the same time. So let's go and deal with the two or three that we can see clearly, and move on with it. And will we be right all the time? Nope. But I don't care if you could go and comprehend 45 variables simultaneously. You're still not going to be right all the time.
Well, it's not
So
right, it's profitable. That's,
yeah, exactly. Yeah, exactly. You're right. But but just keep it simple so we can just move forward and have the probabilities on our side that we're going to be right more than we're going to be wrong. So and that's the whole thing about trading. And by the way, that trade that I was calling out before, coming off that 2800, we're now sitting at 2812. So you probably would have gotten in for where I was calling to go in, probably 2803. And so you could have been up right now at 8, 9 pips.
yeah,
Again, going from one edge to the next edge.
yeah. Hey, guess what I just found? I was looking through my email. This DOL, it's called the draw on liquidity. Um, One of the trader from the UK had asked me to do something about it.
I have not heard of this. Can you explain simply or succinctly what that is?
Let me send you the email. I'd have to refresh myself.
Okay, cool. Well, maybe we can do that and then we can talk about it maybe tomorrow or something.
So anyway, it looks like we're trying to make new highs here, pushing the range up for the day. One of the I was looking at something yesterday, and they were showing how they like to draw a you look at a breakout like right here, and then what you do is you measure this, and then you come to the lowest point of the pullback, and then you put it there again as a target. So I'm not sure. Let's see, try a vertical line from here No, that's not what I want. Insert. Let's try a horizontal line. That I go from... No, that's not what I want either. I need a trend line. Let's see if I can make that work. Try it like that, and then you move it like so, and then maybe I can grab that horizontal line, object list. Walmal, I think he dropped off the call. Let's see. Delete that, delete that. Delete the trend line. So let's see where we're going to wind up. 128.22 is what that predicts. So sometimes you can, look what other people do, test it out, and if it works for you, you can adopt it. And if it doesn't work for you, then you just scrap it. So let's just see how well this works. And just so you know, we're in this upper rat zone. This right here, that's a M15 return bar. So looking for price to return down to about 127.83 sometime in the future. You can see we shot out of the buy zone there, because we also need to cover these candles here. And we're pushing the rat zone up. We're sitting about R2, and since the bias is short near R1, the bias will be short near R2. Bambino flex indicator says to go short near the pivot. I'm not sure if that one paid off today. We did take out today's pivot. We haven't taken out the week yet. We've taken out the month. And just for funds, we missed that H4 pivot right here. Remember, price doesn't like staying in the wick zone. So we shot out of that wick zone. Nice horizontal trade. And we haven't looked at the ATR zone in a long time. We are definitely in the ATR zone here. And so the fastest 15 minutes in trading is just about over. So just remember, when you're trading, it's really not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.